Hello everyone. So today we are going to discuss how taxation of spouses, civil partners and minor children works. So let me share my screen and go through our Excel file. Okay. So the income of both the partners are assessable separately. Okay. So if I have a partner, the partner would need to file a separate tax return. Partner in the sense my spouse, my civil partner. Okay. So I would be filing a separate income tax. Okay. I would be filing separately and she would be filing separately on her income. Okay. We both do have separate personal allowance. Okay. If the assets are jointly held, right, then the income is in general split 50-50 on both. Okay, until and unless you make a joint election to split the income as per your interest. Okay, you can make a joint election so that your income could be split as you want, not in the ratio of 50-50. Okay, now what are the possible ways that you can save tax as a spouse or civil partner? So, the tax savings could be achieved by efficient utilization of personal allowance and nil rate bands of each partner. So, what here you can do is you can't transfer your income. Okay, you need to efficiently utilize your personal allowance such that we do have marriage allowance. We will be discussing now. So you can use marriage allowance so that personal allowance is fully and efficiently utilized. You have nil rate bands, so you have non-savings income nil rate band, dividend income nil rate band, right? So you need to uh, ensure that both of the nil rate bands are efficiently utilized. Okay, it is not wasted up. Okay, so that you both don't pay higher tax. Okay, now there are two ways. Firstly, what you can do is you can change the proportion of ownership through joint declaration. Okay, so let's say I hold an asset. So let's say Mayur and Maria both are spouses. So they hold assets which earns an interest of £1,000 per year. Okay, £1,000 per year. Now it is not like that. In current tax year, Mayur says that I have my like I do want all the interest to be taxed in my name, right? Okay, it can't happen because he would say that I am currently falling in basic rate band. I would like to utilize this full band, so I would take the whole interest income in my return. It shouldn't be happening. Okay, so if you do not have any election, so any asset which you have jointly held with your partner would be split 50-50. So £500 of savings income with Mayur and £500 of savings income with Maria. You can make an election, right? There is an option to make an election such that, let's say, uh, Maria has a interest of 30% in that asset. So that being said, then the £1,000 a year of interest would have 30% allocation to Maria. Okay, 30% savings income. Okay, that £300. Okay, 1,000 into 30% is £300 would be with Maria, and Mayur would have £700. Okay, so this can be a important tool you can consider for tax planning. Okay, next is you can make the other partner as employee or partner in business. Yep, this can be done. Okay, so let's say uh, I have a spouse, right? Who is a wife, who is a housewife. Okay, who is a housewife. She does not have any income, right? My business is profitable. So what I do is, uh, I make her as a partner in my business, either an employee or partner in my business, such that the salary I pay to her, the dividend I declare, would be distributed uh, among both of us, right? Okay, both of us, such that we both consume our personal allowance as well as we use the lowest rate of tax possible with us. Okay, so both the both the partner, both the civil partners, okay, can be into a partnership arrangement, or the another partner can be an employee. Okay, now let's take an example. So let's say Raju is running a retail business, and he is being taxed at higher rate. Okay, now higher rate, as you know, the tax is 40%. You would be bearing tax rate of 40%, as high as 40%, right? So what Raju did is, okay, what Raju did is he added his wife as an employee. Okay, his wife his wife as an employee. Okay, he took his wife as an employee in his business. Okay, he thought she could work in his business. Now, there are certain conditions that you must meet. Okay, it should be actual work, right? It shouldn't be a tax planning strategy for you, tax avoidance strategy for you. The housewife should put in hours and certain other conditions that need to be met. Okay, it isn't as simple as this. So the employment income, okay, the employment income paid to Kavya. Okay, so if I have a business, I have a trading profit of 10,000 pound. I pay 2,000 pound as a salary to Kavya. Okay, then my total trading profit would reduce, so I would have lesser tax on my trading profit. Okay, and Kavya, uh, which she did not have any income till now, would get 2,000 pound of income, which would be wholly covered by her personal allowance. Okay, so Kavya would be paying tax on employment income, which could be covered by her personal allowance, which was unused earlier, right? So this reduces the overall tax liability of partners. Okay, so Raju can take Kavya even as a partner in the business. In a way, the exposure to higher rate tax could be reduced. So he would want to fall into 20% band as much as possible. Both partner should fall into 20% band instead of one partner having no income and one partner bearing high taxes. Okay, hope it's clear till now. I hope it's clear till now. Okay, next is marriage allowance. So what is marriage allowance? So marriage allowance provides us with an opportunity such that an individual can transfer 10% of their personal allowance to his or her civil partner or spouse if they both are basic rate taxpayer. So if me and my partner are basic rate taxpayer, me and my partner are basic rate taxpayer, I could transfer 10% of my personal allowance to him or her. Okay, him or her, either way. Okay, so let's say the personal allowance is not, let's say, it is actually okay. So 12,570 is our personal allowance, and we have how much personal allowance which could be transferred? It is 10%. Okay, so it is 1,257. So they say round figure of 1,260 pound. Okay, now one thing here is that you cannot transfer partial amount. Okay, either you transfer 10% or you do not transfer any. You do not have any option to transfer a partial amount, personal allowance. So let's say I want to transfer 600 pound to my partner. This couldn't be done. Okay, you either transfer 10% or you do not transfer anything. Okay, now how much tax savings is achieved? So 1,260 pound. Oh, sorry. Okay, okay. 1,260 pound multiplied by, now both are basic rate taxpayers, so the tax savings would be 20%, right? So 252 pound of tax savings has been earned here. Okay, 252 pound, which is a lot. Okay, which is a lot. You can go to Starbucks, have some meals. Okay, many things you can have. Okay, now this election can be made up to 4 years after the end of tax year. Okay, so let's say if it is 25, 26 as my current year, I can make election till 6th of April 2030. Okay, 2030. So after 4 years, till after 4 years, you have the option to make a joint election. Okay. So if election is made within the tax year, then it will continue to apply in subsequent years until withdrawn. Now, once you enroll in this election, okay, you you would continue to have this marriage allowance being applicable in your tax return every year, right? This allowance would be transferred every year until and unless you withdraw this election. Okay, until and unless you withdraw this election. Perfect. Now let's see an example. So Amya and John are married couple. Their income has been given for 24-25. So the employment pension, both have 1,60,000 and 25,000. Both have savings income. Amya has savings income of 4,000 and John has savings income of £200. Dividend income, Amya doesn't have any and John have £5,000. Now here, if you can see, Amya is a higher rate taxpayer. Amya is a higher rate taxpayer, isn't it? Okay. And John has lower income, right? John has lower income. John does not have savings income, much savings income as Amya. Amya would be taxed at a higher rate, while John has still available his savings income nil rate band. He has not utilized it fully. Can it be a tax plan for us? Yep. Dividend income again. Amya isn't using any of her dividend income nil rate band. She does not have any dividend income. Okay, so what could be done? What could be done is dividend income could not be individually transferred to the partner, right? Directly, you need to separate out the assets. Okay, the shares must be split out between the partner in a ratio such that Amya's dividend income nil rate band is fully utilized. Okay, okay. Now you need to be careful here because if you take more than £500 as dividend income for Amaya, okay, Amaya, okay, uh, don't go to the name, okay. So if you take more than £500, that is the nil rate band of dividend income, then you would be paying higher tax, isn't it? Because she's already into higher rate, additional rate taxpayer. She is already an additional rate taxpayer. Apology, I said higher rate earlier. It is an additional rate taxpayer because the income exceeds 1,25,000. What was the band here? What was the band here? So if I show you 1,25,000, 140 pound and more. Okay. So she is crossing the high rate band. She is in the additional rate band. So now let's see your example how that works. So first example is how these things work when you do not make any election to transfer anything. Okay. So we got the net income. Okay. We applied personal allowance. So 17,630 was the taxable income after applying personal allowance. We used our savings income nil rate band, savings income nil rate band. Okay. I hope you are still you do still remember savings income nil rate band, which is £1,000 for basic rate taxpayer and high rate taxpayer. It is £500. Okay, so only 200 is utilized. Next is another part is here calculated under basic rate band. Okay, so non-savings income, whichever is left, is taken under. So you need to also check that we have applied personal allowance here, right? Firstly, you would apply against non-savings income. Then whatever is left, we would be paying 20% tax on it. And we have £5,000 of dividend, which would be again covered under basic rate band. We have taken £500 of nil rate band and over 4,500. So part above £500 is taxed at 8.75%. As you can see in our previous video, we have discussed the bands as well. So we would be incurring total tax liability of £2,880. Okay. Okay. Now, for this, you might question why isn't marriage allowance available? Both partners should be in basic rate. Both partners should be in basic rate band. Another thing, do Amya have any personal allowance available? No, because her income exceeds 1 lakh. Okay, we saw that how the personal allowance reduces as and when you cross 1 lakh pound of total income. Okay, so now let's calculate for Amaya. So she had net income of 1 lakh 64,000 and total was 1 lakh 64. So firstly, let us use the basic rate band. So 37,700 pound fully utilized at 20 percentage. Whatever is left after that would be charged as 40 percentage. And now you have additional rate band. Now so firstly you charge till here 1 lakh 25 140 minus 37 700 pound. Now you move to additional rate band, which is actually 40 percentage. Okay, it is 45%. Sorry. Okay, sorry. Perfect. So here we took, so firstly, the basic rate band 37 700 pound, and then till 1 lakh 25 140, you had 40 percentage of charge, and at the end, you have 45 percentage. Okay, then you move to savings income. So savings income has 100 and 800 pound of tax. Why? Because 4,000 into 45 percentage, we are in additional rate band. Perfect. Okay. So 60,000 was my tax liability, and the total tax liability of both the partner remains as 60 to 883 pound. Okay. Savings income nil rate band isn't available because she is additional rate taxpayer, and no starting rate band is available for both of them, as non-savings income is not less than 5,000 pound. Okay. In both of the cases, non-savings income is less than 5,000 pounds, so you do not need to think of starting rate band here. Okay. Now, what is the problem? What is the problem here? John is not able to use full savings income nil rate band, and Amya is not able to use dividend income nil rate band. So, what we can do is we can transfer the savings income of 4,000 pound that Amya has to John. Okay, so that he could use his savings income nil rate band of 1,000 pound. And for Amya, we could transfer the dividend income from John of 500 pound, so that 500 pound of nil rate band is fully utilized. So let's see how the calculation works on here. Okay, so the similar calculation here, we have 4,000 additional and here we have 5,000 additional. Okay, okay. So where it went? Okay, so 5,000 out of which we transferred 5,000 out of which we had, again, sorry. So John transferred 500 pound of dividend income nil rate band here. So 500 is removed directly from here. So 5,000 minus 500 pound, and savings income we got from Amya of 4,000 pounds. So 4,000 plus 200 pound. Now we have total of 21 130 pound. So let's start it. Our non-savings income basic rate band 20 percentage. Okay, then we have savings income nil rate band of 1,000 pound utilized, and we have again 20 percentage tax on this. Okay, and dividend income is just 4,500, which is reduced, right? So 500 pound of nil rate band here as well, and over and above that 8.75 percentage. So we have 3,476 pound as our taxation. Okay, perfect. Now let's move to Amya. So Amya transferred all her savings income, so she has zero savings income as of now. Dividend income 500 pound was being transferred, and it would be covered by nil rate band. So basic, higher, and additional rate band. Okay, basic, higher, and additional. I don't know why I haven't applied it here. Okay, perfect. Okay. So what the total tax liability comes now is 61,679 pound. Okay. Now if you compare, earlier we had a total tax liability of 62,883 pound. Now we have tax liability of 61,679 pound. What is the difference? So we have saved 1,200 pound. We have saved 1,200 pound, which is enough for you to bear accountant fees for a limited company. Okay. So you have saved 1,200 pound. Okay, if you are Indian, okay, if you are Indian studying here, and if you save this much multiplied by 100, I would say 120, I guess. Okay, around 1,44,000. Have a trip to Dubai, enjoy. Okay, with this type of arrangement. Okay, this is how you can have a tax savings applicable here. Perfect. Okay. Now let's talk about marriage allowance, how it works. So Komal and Karan's income has been provided to us. Komal has an income of 12,000 pound and Karan has an income of 20,000 pound. So how would it work when we transfer our personal allowance? So Komal, because she has 12,000 pound of income, 570 is being wasted. 5,070 pound is wasted because personal allowance is 12,570 pounds. So what she decided is that she would transfer that personal allowance to her partner of 1 to 6 pound. That is 10% of her personal allowance. So now what she has available now is 11,310. So the taxable income would reduce to 12,000 less 11,310. Okay, so 12,000 was her income, out of which only 11,310 is left out as a personal allowance when you transfer this amount to Karan. Now, Karan, if he receives 1,260 pound, his personal allowance would increase to 13,830 pound. So her taxable income would be 20,000. The total income he has less the personal allowance, the updated personal allowance balance that he holds. Okay. Perfect. So this is how personal allowance for can be transferred and how marriage allowance works. Now for the last one, we have two another partners, Pat and Christine. They have made an election to transfer the fixed amount of personal allowance from Pat to Christine. So Pat has a dividend income of 500 pound. Christine owns a small trading business. Okay. So I would suggest you to do it yourself. Drop in the comment if you have all the answers, and I would try to review that. Uh, so this was almost all things being covered about marriage allowance. One last small topic which is left is income of minor children. So if a children is under 18 years, he is also accessible to income tax if he is earning anything. Although he also has personal allowance being available. But what happens here is that if you have an income, if you have an income from the funds that are provided by the parents. So what could be this? So income from trust set up by parents. So parents set up trust for their children, gifts of money or any bank account that has been opened by parents. Okay. So if this income, okay, if any income that is being earned, okay, if it is more than 100 pound from this sources, it would be taxed on parent. If it is less than 100 pound, it would be taxed on the children. Okay, so this was in short about income of a minor children. Okay, so I think we mostly covered all of the part and we have covered the basics of individual taxation. We would move on to further topics soon, as in when I get some time. Uh, as of now, thank you so much for watching. If you found the content useful, like our video. Okay, like our video, share this video, and let me know in comments if you want anything else. Thank you.